Greetings, members one and all of the Salivation Nation. It is my distinct honor and privilege to have with us here from the technicaltraders.com, Chris Vermeulen is with us here. Hello, Chris. How are you doing, sir?
I'm great. Thanks for having me on the show.
It's quite an honor. You know, you're involved in a subject that I know very little about. I've talked about it on my channel, but there is a lot to it, and you have been very successful and paid off your final year of college in doing what you do now, and be able to read these markets, which is just amazing for sure. So can you tell us a little bit about your company, the technicaltraders.com, a little bit on how you got started?
Sure. Yeah. Well, I got started trading in high school. I think I was 16, and it was in finance class, and we see which finance class could be the best performing in our province. And we didn't win by any means, but everybody picked their portfolios, and I saw how much money you could make trading. And that's how I got addicted to the stock market. It became my video game. And then as I went to college and I got old enough, I got my dad to co-sign on a trading account, and I started trading. And I made enough money through college to pay for the last year and tuition and books and residence and all that stuff. And so that was when I started actually teaching my roommates and their friends. I'm like, hey, let's all start trading. So the seed was planted really young in high school that, hey, I don't need to deal with people. I can just sit in my office and I can trade and make a fortune. So that was my plan from day one, and that's been my focus. And here I am, 25 years or so later. All I do is trade, and I teach others to trade using technical analysis. And technical analysis is studying the price charts. So I don't look at fundamentals. I don't care about economic data or any of that stuff. I used to, and I used to think it was important, which it's not important for the way that I trade, because you can have stocks with killer earnings, better than expected earnings, and the stock price still falls dramatically. And companies that were making a ton of money during the bear market, those stocks were still falling, even though the fundamentals were getting better. So I realized that fundamentals and data like that just doesn't work for me. I don't believe in it. So I follow price. The only way we make money as a trader or a silver or gold investor is when price moves up from where we bought it. And so I just follow price 100%. And that's what I do. I turn on the charts, and within seconds I can know whether I want to look deeper into it or just pass on it or jump into a trade. So it saves a lot of time and definitely takes a lot of bias out of the market.
It's amazing. What you just said blows my mind, because it flies in the face of everything that I talk about on my channel for the most part. It's actually fascinating, because for me, I'm kind of a fundamentals guy, but obviously, I'm not a trader. I don't have financial advice. I do have a crystal ball, but it's just a little glass thing that is sitting on the counter. I might show that in a video sometime. But nonetheless, I mean, what I look at is the fundamentals, is the psychology of the markets. You hear me talk about that a lot. So that's why I find what you do fascinating, and that's why I want to learn a little bit more about it. And it's quite intriguing, because obviously what you do is technical trading across all platforms. I mean, as far as all assets and everything like that. But gold and silver is something that you are obviously keen on as well. You've been interviewed by various different respected programs and the like, and so your advice is quite valued. And but it's something that I've never really fully was able to grasp and understand, but obviously there's a lot of complexity to it, hence why you coach and school people on this. But there's candlesticks, and last time I had a candle in this room, I had to be careful. It was a fire hazard. So yeah. But yeah, so it's pretty neat. It's pretty amazing. So with that being said, you've confirmed my suspicion all along, is that really technical analysis does not take into consideration some of these fundamentals. In fact, you are proud that you separate that. You don't have to worry about it based off of what you do. So I guess on a general sense, without you giving away any trade secrets, getting into the meat of this thing, why don't you care about that stuff? Because it seems like it's so influential, I would think. The psychology of the markets,
Yeah, well, fundamentals and psychology are very different. The stock market moves because of psychology, of what people think and feel. Fundamentals really, to me, are totally different different beast. And when the technicals and the fundamentals line up, which is kind of what they're doing with precious metals right now, then you get into like a perfect storm scenario. I did a presentation a few months back talking about this new super cycle starting in the commodity sector. Last time this super cycle bottomed was in 2003, 2002, somewhere in there. And of course, we all know what gold and silver did back then. That was the major bottom. It's like it's a 20-year super cycle that's really come full circle again. We're seeing the same thing that was happening back then. Everyone's into stocks, everyone's piling into technology, everyone's got real estate, and I mean everyone is now a stock trader, and they do renovations and they buy and flip homes, right? So commodities are the most undervalued asset right now, where everything else is overvalued, and everyone seems to be piling into it. So I think the fundamentals, the technicals are both coming together for metals. It's why I really, really like them right now. And what's going on with all the printing around the world, I mean, with the fiat currencies, I mean, it's a perfect storm for metals long term. So.
And I guess honing in, on what fundamentals, how would you describe that? When I think of fundamentals, I think of what the commodities are in general. When we talk about gold and silver, the fundamentals are, well, hey, they typically are hedges against economic instability. So is there something broader to that aspect when you think of fundamentals?
Yeah, not so much. I mean, I look at it from a really high level. I don't go into the fundamentals at all really anymore. All I know is there's lots of printing going on. The financial system is broken. Every country's broke. Everything is rigged and jigged up. And I mean, it's just everything's MacGyvered, right? Eventually, the brown stuff's going to hit the fan, and physical metals should shine. So when that aligns with the technicals and we start to see price breaking out, which is we have seen that. Gold broke into a bull market in 2019. Silver broke into and miners broke into a bull market in 2020. This year we saw platinum break into a bull market. So the momentum is coming, and the music I would think is going to end some point. This is a huge super cycle, just like a real estate cycle. You can see it coming, but you don't know if it's 3 months down the road or 3 more years. These take a while to unfold. So when will metals go ballistic and the financial systems fully crash? If they do, I mean, it still could be another 2, 3, 4 years out, but the writing's on the wall. You've got to have some insurance, which is physical metals. That's the way I see it.
Right, exactly. I agree. So with technical analysis, you are essentially using the patterns of the past to get an indication of the future.
Right. Yeah. And I've got some charts here. We can look at the charts, and let me pull those up, and I'll give you a really kind of quick high level view here without getting too technical. You should see my screen here. Right. So this is the silver daily chart, and we can zoom back a little bit further here. You can see this is the 2011 highway over here, and then we've been in this giant bear market. It's been putting in a big bottom formation, and if we were to just zoom in to this recent kind of price action that we saw this year, this is the last line in the sand here. This is a significant high. When you break that level, that was when we saw a huge short squeeze in the silver sector, the whole silver area. This is when we saw, just that parabolic breakout.
That was last year's silver squeeze. That's right. Yep.
Yeah. Last year's silver squeeze, 2020, and that was kind of clearing the chamber. So it's broken out of this multi-year sideways basing formation. Once it breaks out, we're usually going to see a multi-year run. And so we've had the first pullback and pause. It's kind of consolidating. This chart doesn't show it. Silver's a little bit messier of a chart. Let's go to the weekly chart and just take a better look here. But more or less, when you break out of a bear market, say over here in 2008, we had the big correction. It puts in a bottom, and then it finally breaks out of that base, and you have a very strong impulse move. Now, this impulse move is the shorts covering, everyone getting on the proper side of silver, and that's what drives it up. Well, we saw the same thing last year. It broke through, and everyone got on the right side. And then usually the market has its first pause and pullback. And that's what we saw over here in 2010. This is the first pause and pullback of this new bull market. and it can be bought. This is the first opportunity that says, hey, this is the first pause, and we should see at least the second half of that run to the upside. And if we were to throw a Fibonacci extension, it's using momentum. If we were to just use this little tool, it tells us where the price momentum is set to go next. Very, very simple tool. I use it for everything from protective stops all the way to targets. But you can see here, it's showing silver should go all the way up to roughly 39.80, the $40 mark. Brings us through pretty much these blow off top exhaustion, kind of this topping phase over here. So everything is very balanced. Silver $39, $40 over the next 6, 8, 12 months is very realistic, and that would be a very important level where it'll probably run out of speed there, out of steam, upward momentum, probably pull back and have some pause and consolidation for several months, and then if it was to break that one, then we're going up into that $80 mark per silver. But I mean that's kind of way out there. Probably need some financial issues to take place for that to spike. But that's kind of the view of where I think silver is headed over the next 12 months.
Wow, that's great. So the Fibonacci curve, that is essentially as a tool that helps you predict based off of the past pattern that you just outlined here.
Yeah. Yeah.
Okay,
hold on one sec. I got to get my dog out of here.
Oh, no worries. No worries. Yes, indeed. Dogs are in the house. They help us through. We don't want silver to get dogged. That's exactly right. So in order for silver not to get dogged, we must involve the softness of cuddly kitties to help us through this analysis and where things are going with the silver markets. Cats always are very good. They purr our way into the maelstrom instead of barking our way into a bull market or a bear market. Very good. Okay. Nice.
All right, so let's take. You want to look at platinum really quick?
Yes, platinum has been something. I've been bullish on platinum for the last year, and I know several of my viewers have noticed that and have kind of come on board with it. So, yeah, what you're going to show us here, I think, is going to be quite exciting because you're saying that platinum is kind of heading into a bull run here as well. Do bulls purr, by the way?
Do they purr? No.
No, they don't.
I don't know what sound they make. I guess they grunt.
Yeah, they must grunt.
I don't know what they do. They just make some funny sounds and you just run like
right. That's right.
Yeah. So if we take a look at the platinum chart here, this is the weekly chart going back to 2015. If we were to just draw a line across here, this is a pretty significant technical level where more or less price has hit resistance 1, 2, 3, 4, 5 times. And then it started to break out in December of last year, so just about a month and a half ago.
Right.
And of course, once it breaks this level, it can have a pretty significant move to the upside. And if we were to just kind of eliminate this type of price action and just zoom in, we can use this Fibonacci extension tool to give us an idea of where platinum should go. So using this extension, which is more or less using momentum, saying if it rallied from this low and rallied all the way up to this high, and then it pulled back to this low, where's the next upside target based on this momentum in this pullback? Well, if we were to just squish the chart down and then move it over, and you can see, I'm just going to drag this marker right over to where we are here.
Okay.
You can see as of today, you and I recording this is February 15th. We can see this is more or less it's hit the 1300 mark. It's hit that 100% measured move. So based on this rally and this pause, this is a bull flag, which is known as a halfway point.
Okay.
So when you get a bull flag, that means whatever this run was up into that bull flag, that same run should happen to the upside next. And so we've hit this level now. So this is a pretty critical line in the sand where I think platinum might actually start to take a bit of a breather. If we just zoom back on the charts and get a look and draw a line across this 1300 mark, you can see it's pretty significant. We had a high here, it traded through here, got close once, twice, traded through another high, broke through it, even had a wick low. I mean, this is a pretty small chart to see, but we traded through it for several months. We hit it again here and here and here. So that measured move, you're going to notice with Fibonacci extensions, they tend to match up with a lot of previous history. So all these momentum moves, think of this chart. When you look at this chart right here, if I was to draw a support level right down here where the significant low is, think of a price chart like an apartment building. You've got a floor, you've got a ceiling. This is the first floor. And then you can find out technically where the next ceiling is. Typically, they almost go the same distance. You could take this distance and just stack it on top. A lot of times they're the same height. And so when you break through a ceiling, if it's got enough momentum, it should go right up and hit the next ceiling. And then it's going to pull back and consolidate before it tries to break through that ceiling again. Sometimes it'll fall all the way back down and touch the floor. When it hits the floor, it's going to bounce. You can trade these short-term technical bounces. So that's what I like to look at the charts. I kind of call it like a chart apartment. I did a video on it once. Just you draw all these lines and you just watch the price chart just kind of ping pong and break through ceilings and then break through floors. And depending if it's making higher highs or lower lows, it's either in an uptrend or a downtrend. And you want to always trade with the overall trend. So Platinum's had a nice run. It's going parabolic here. It's hit resistance. To me, I think it's going to have some type of pause and pullback. We could see it easily pull back to 1,200 very easily, but that would still be very bullish. Actually, a pullback and a pause here for several months means it's going to go a lot higher and it'll be sustainable. But when something goes straight up, kind of like what we saw with GME, AMC, and even the silver price there, when something gets hit with news, you get a parabolic spike. Well, if something goes straight up, it usually comes straight back down because it's not sustainable. Whereas a chart like this, it rallies up, it hits a ceiling, and then it consolidates and trades sideways for a few months, builds up energy. People are taking profits who want to. New people are moving in. So the shares or the contracts are changing hands from weak people locking in gains to new people willing to hold on to it over time so it can go higher. And so that's what we want to see here is we actually want to see Platinum pull back, not spike up to 1,400 or 1,500, because if it does, it's probably going to come back down to 1,200 anyway. And it's going to it's going to do damage to the chart, telling us that, hey, that might have actually been too much of a move. It's an exhaustion kind of blow off top. And that might have been a very significant high that might take years to break again.
Right. And I think it's interesting because what I'm looking at here is sort of this sawtooth pattern, especially in this area here, from 2017 October through April in this area here, and so you see that, but also the time period between each of these is interesting because, like you said, it could take a couple of months. You don't really know. Yeah. And but I guess going back to it and kind of wondering, because when you look here in March, April of 2020, that big dip there, we saw that with gold and silver as well. Mm-hmm. And a lot of that was people running to the safety of cash and the SLV, GLD, and I guess it looks like that Platinum may have some sort of ETF as well. And so people were running to the safety of cash. Then why? Because, well, the coronavirus hit, people were scared, and which is why people think that sometimes you run into a deflationary situation before a hyperinflationary one. But in terms of the metals, even people in metals can run to cash when they're scared, especially in the electronic markets. And that was something that was based off of the news cycle. And so obviously that big dip there, that I won't call it a crash because, but that was unexpected by all of us and probably you as well to a degree. So things like that. And of course, these big spikes upward that generally do come back down. How does that play in terms of technical analysis when things like that was a psychological event there come into play that move these markets and especially the faith in the dollar? We've heard talk about how the Fed chairman can make a statement and one word in a press release can run people scared in the markets. We definitely see big sentiment shifts, and we see, I'd call that a crash. When we saw the February, March crash there, precious metals really crashed too. That's a huge crash. And
it doesn't matter. A lot of people see precious metals as a safe haven. I don't so much see it as a safe haven because in 2008, we saw metals crash or sell off dramatically. I think gold pulled back like 30% or something, silver much, much more. The 2020 kind of COVID crash, we saw metals pull back very sharply as well. More or less, when people are fearful, especially with the coronavirus for their life, they don't care what it is. They're selling it. They're cashing out and they're protecting themselves, right? So when we actually have real fear in the market, like we saw in 2008, the financial crash, people are worried about their money. They just want to liquidate. They don't know what is safe place to be, so they just go straight to cash. So we will see metals move lower when we get that kind of fear in the market. Now, I think the type of fear that we've got now we understand what the COVID is and kind of how to manage it. I think going forward, we're not going to have that quite so much that type of fear, run for your life fear. I think we're starting to see fear of like the financial system just really getting worse and worse. And that kind of fear should be good for metals. And I think we're going to see them have a pretty big run. Eventually, there will be like some panic selling when there's panic selling in the stock market. That'll pull the markets, the precious metals down a bit. But overall, I think we're actually going to continue to see precious metals hold up. When you look at the long-term charts, for example, if we were to just flip to gold real quick and look at these patterns, I mean, you can see these massive moves, these massive bull flags. If I can draw on here, hopefully we can see it, but you get a rally up and then you get a bull flag and then you get a rally up and then you get a bull flag and you get a rally up. It's a series of bull flags depending how big you want to go. The one that's brewing right now, obviously gold is breaking to new highs.
Right.
And we've seen this huge initial run from a multi-year bull market. And this is the first major investor kind of move. Now, if we were to throw an extension on here of where gold could run when the financial system has some serious issues, we're looking at, this prediction is much smaller than a lot of other people, but based on technical analysis, gold can run up to 2,700 very easily from here. And just like I showed you when gold breaks out of a basing formation, a multi-year bear market, has that initial first run. Well, we just kind of broke to all-time highs, and this is it's just consolidating there. I think we're going to see like a big run up. This would be the first pullback and pause, and then we'd have that second half that would take us into probably the high 3,000 mark or 4,000 mark going forward. So there's a lot of upside potential long-term on these, and I like the charts from that standpoint, but these are big patterns, big cycles. I think for all we know, we still could be another, it could trade sideways here for another year or two before we see this big consolidation eventually break to the upside and explode higher.
So this aspect of it, because I do see it, you see these ups and downs that saw to the bull flags as you talk about here. You're just not, you really can't give a time frame for it, but you can see the momentum moving forward based off of the past performance of these metals. And I think that's intriguing. I mean, $2,700 gold is kind of near where most experts have been saying it could possibly go, perhaps this year. And so it's just a matter of timing it, but it is fascinating. That's pretty neat. And there's also things called wedges, from what I understand, in technical analysis too.
There's a lot of different patterns, and each one of them has a different characteristic on how it should be traded or could be traded, and how powerful the move will be after that. But just to touch on your point here of how long this play could take, if you're to look, I'm just zoom out a little bit here. You can see the bottom came in 2018, and so it's 1, 2, 3 years. So if gold was to start to rally and break out here, a perfect move would be something that usually takes place. The second half happens in the same amount of time, roughly. So over the next 3 years, we could see this move up and hit that $2,600 target. So a lot of times patterns are kind of weighted in terms of if it took 2 months for that pattern, that first bull flag to unfold, then the second half should take another 2 months. Usually it's a little bit quicker than the first half because the second half usually has more momentum, more people see it, and then they chase it and they drive the price up faster. So, this pattern here is looking at, 2 to 3 years, we could see $2,600 gold at that point. So you can get a little bit of a gauge in terms of price patterns. Now, you mentioned the rising wedge. Rising wedges to me are really tough to trade because they can act as like a running consolidation, meaning instead of price rallying up and then flagging back and taking a pause like a bull flag, a rising wedge is kind of rallying up and then it's kind of going to a point up into the sky, and it's either going to be a blow off top, a very strong move, or it's going to have a complete failure and have a huge crash. And it's not something you want to get in front of and bet before it breaks out. You need to see which way it's going to break first. And if you can trade it, it's going to have a very strong move. So it's a really violent, I almost think of it like almost like a plane stalling. It starts to chatter and you can feel it's about to stall, and then suddenly it just crashes. The nose falls, right? So that's, to me, a rising wedge is really deadly. You don't know if it's going to like shoot a rocket and take off.
Right.
It's going to like nose down and crash.
Moving a little bit away from this subject, and that is the tools, especially for silver and gold. You've got GLD, you've got SLV, and now we're hearing about, I don't know if you're familiar with the PSLV. They say that is an ETF that is more closely tied to the physical. Can you explain those and how they work and how those are being utilized in the markets?
Yeah, so the SLV, I've traded it a lot. I mean, it's very liquid. It moves very nicely. You can do options on it. You can do all kinds of stuff with it. But I mean, there's such a huge inflow of people piling into SLV. And there's always been this question, even for GLD, like there's just so much money piling into it. How are they going to back it by physical metals? And this is where I don't trust the financial system, is that they're going to say it's backed, but it's going to be just a piece of paper saying, we bought this many contracts, but they don't actually probably have the delivery or like have the actual metals. And that's the problem with something that's, almost too big, that you just can't get that kind of volume. You can't back it up. So I'm not a fan of ever holding long-term SLV or anything like that. I'd be looking for one, like an ETF, like you mentioned there, that's going to be like backed and it's going to be, it's going to have the physical metals behind it, like a Sprott gold or silver fund, those type of plays, because if something happens, well, they've got it in the vault and it's been verified. And I mean, you can go and you can exchange I think with the Sprott, you can exchange your shares even for physical metals. So it's pretty amazing. And that to me is a safe play. SLV is kind of the mass media. Everyone piles into it. It's probably not the safest if the financial system was to crash. I don't think, I've seen ETFs implode and blow up and everyone loses their money. So why couldn't that happen with an SLV or something? If silver goes through the roof and everyone wants their delivery, but nobody can even get delivery, I mean, the holders of the ETF could be in trouble. Now, I don't know. I don't dig into those details too much, but I just know the volumes are so big and there's a lot of controversy out there about it. I just don't even really think about investing in something like that.
I'm with you. I've always been a little bit wary about it. I'm not one of these people that believes in macro manipulation, but I do believe in micro manipulation. In fact, JP Morgan's been at the center of that. Of course, they're the custodian for SLV. And again, I have no problem with people, that are bullish on putting their money in SLV as sort of an insurance policy from within their stock portfolio. They move it out when they get uncomfortable, but usually what do? They move it out into either a core account or into some other stock. And so they don't test it, and people that do, they try. You have to have so many thousands of ounces, and there's a huge fee in order to take delivery if that even were to happen. But PSLV, from what I understand, is something that is more closely. I don't know if Sprott's tied to that one or not. I don't know enough about it, but that is kind of the talk these days as to how people can get in the markets and utilize it with something that's a little bit more verifiable. But I certainly am with you. The physical metal itself, I'm a physical guy. I'm tactile. I like to see it. I like to touch it and hold it. Do you do physical accumulation of precious metals yourself?
I do. Yeah. Yeah. I've got that. That's really the only way I hold it. I don't own any ETFs around precious metals.
Oh, really? Okay.
Yeah. No, I'm pure physical. And yeah, it's to me, I buy precious metals in case the financial system crashes or something that, the physical metals are going to go up in value to counter the losses from the currency collapsing or real estate crashing or from something. So I'm all about that. I like to store it. I like silver and gold. I mean, I even last year I bought some 1,000-ounce bars just because I had to hold one. And
oh, wow.
So yeah. I got a couple of those, and they're way heavier and bigger than I actually imagined.
72 pounds for one of those bars, over 72 pounds. Yes.
Yeah, they're heavy, and I've got lots of gold bars. I saw your video with, I think you had 200 ounces of gold there. I mean, it's amazing. And then I watched your fake gold. How do you know if it's fake gold? And that's something I've always wondered. I always buy stuff that's prepackaged and from certified places, but that is like a huge concern. Looking at are you buying fake secondhand gold or whatever? So it's intimidating. You definitely need to buy from a proper source.
Yep.
Have the assays and all that stuff.
Now we're living in an age where premiums are through the roof, and we've been spoiled over the last couple of years and finding deals for 69 cents above spot for an ounce of silver. Now it's 85 cents an ounce for a 1,000-ounce bar. Trading on the COMEX. So, it's the premiums have really skyrocketed. But, people, and I always tell folks, hey, you buy something only that you understand. You have to understand that when you buy a Silver Eagle these days, or a Canadian Maple Leaf even, which have a little bit lower premiums, but nonetheless, you are paying a fair amount above spot price. And that premium you can't expect to always get back. Although in this day and age, if you were to sell your Canadian Maple Leafs or Silver Eagles, you will get above spot for it almost every time, no matter who you sell it to, because it's in demand.
Yeah, that's where I vary quite a bit. Is I'm not into collecting coins. I have one coin that a subscriber sent me, a silver Liberty coin, I think it is. Anyway, I do pure bullion bars and rounds. I'm not looking to pay any premium for it to be stamped with something, because I think down the road potentially. I just want the most for the money. I don't care if it's a coin or I'd rather have just a round, because you save that little bit. And if you're buying thousands and thousands of ounces, it adds up. And I don't know. I'm very efficient that way, that I want to own the most for the least amount of money, but still reputable brands, and just do it that way. So that's where I am, because I see some of the premiums are so high on these coins. I'm like, I don't know. It seems like you're overpaying for a brand. That's the way I see it. I don't put any. I'm not a collector. I'm not trying to look at them. I just take the bars and I stash them away, and I'm probably never going to see them again, because when I want to sell them, the vault will just buy them off me, and they're just there to insure me in case the world falls apart. I can fall back onto some bars. And
is that vault close? You have access to it. You can get to it if you need to. You have the assurance that it's there and everything. So when you buy, you typically don't see it. You have it stored in this vault, correct?
Well, I've taken delivery and then I take it to the vault. Yeah.
That's good. And the fact that the vault will buy it off of you is a wonderful thing. Now, obviously, the spread between the premiums that you pay for those, because even now, as you know, and even before, there are some premiums, obviously, but they're minimized because you're buying just bullion bars. But when you sell those, they're obviously going to take a little bit off for those premiums. But I'm sure now, if you wanted to sell those, you would get above spot for them now, I'm sure, in this market nowadays. But in a normal market, you probably would get, I don't know how that vault would work, but how would they purchase that from you?
Yeah. Obviously they're going to buy it a little bit below. There's always a cost to it. The key is that it can be sold in a heartbeat and move on, right? Because here's one of my fears is that we're going to see silver or gold spike and go absolutely ballistic, like a Bitcoin type spike. And I want to be able to just call up and be like, hey, I want to sell these bars and those rounds and this many ounces of each, and take them off my hands and gone. And I mean, whatever the fee is, I'm going to just probably sell it, right? I'm not really going to, you don't have much of a choice. When you sell it, somebody's going to always have to make some money on it. So I've already factored in that. I'm not planning on selling metals unless they're worth ridiculously more than I paid for them. And there's just a cost to selling, and I've just accepted that, right? Just like a brokerage fee to get in and get out. There's going to be that little bit of a cost on each end, in and out.
Very true. Well, that's great. Well, I mean, it's amazing and it's awesome. I had no idea that you don't have positions in the ETFs, but I think that's great. You are a physical guy, and that's awesome. Yeah, and you're alive and breathing for sure. Yes. All right. Well, very good. Well, Chris, this has been really educational and fun, and I've learned so much, and very much appreciate you coming on here for sure, and maybe we can have you back sometime. Any final thoughts about where you see things going, especially with I guess this is kind of a big final question, but we saw the Wall Street Bets action on SLV. Now there's a new one called Wall Street Silver, and they're moving on PSLV. It's kind of what I refer to kind of as the silver squeeze part 2, based off what's happened this year. But any thoughts on that kind of activity and moving forward?
Yeah, I mean, they've created a big pop in silver there. It pretty much fizzled right back out. But I think it's going to be really interesting in how it plays out. I think it's going to be very good for metals, for silver. The thing is, when we saw the Reddit group push the stocks, we saw a huge stock surge in GME and AMC, and even in silver miners. But the silver plays a little bit different because most people can't trade silver futures. They could buy the ETFs based around it. But I see the way that silver is going now is everyone's actually buying physical, and they're just loading up and they're storing it, and it's creating this massive demand for silver, which it's very tough to get. And I think when we see the futures contract come up for expiry and we come to the delivery date, I think there's going to be like probably a record amount of silver contracts that need to be delivered. I think there's just so much demand, and I think that's when we're going to start to see the silver price and some really huge spreads, premiums on physicals then because of everyone piling in and buying silver. And as long as everyone keeps doing that, I think it's going to create that short squeeze. Well, I don't think we've seen that short squeeze in silver at all. I think it's going to come when physical delivery comes. I think it's going to create a surge. So it's kind of a slow burn. And I think it's not like an instant return like a stock trade. I think this is going to take a little while, and it's probably going to end up being really good for everyone who owns silver, and we watch it pop. And just the key is to make sure you've got a way to sell some of it when the time comes. If it spikes straight up, I mean, you really need to take some partial profits and sell some of it, because if it goes straight up, it's most likely coming at least 50% of the way back down. That's the way I see it. A spike up usually will come straight back down, or at least half of that spike value. So you got to be ready on the sell button to profit from some of this, speculative nature that we're all doing in silver and gold.
I agree completely. And in fact, because I've talked about the silver squeeze, and I kind of say that in quote, there never really was one, a move up to $30. I don't think it constitutes really the squeeze will come when there's, when the physical has to be delivered or what have you. So yes, so I kind of use that term sort of as kind of the buzzword, but really there's not been a squeeze. Well, very good. Well, Chris, thank you again. I really appreciate you sharing your knowledge and insights with us. And I will post a link to the technicaltraders.com in the description below. Anywhere else where people can find you?
I mean, we're on Facebook and Twitter, but if you go to the technicaltraders.com, go to our free research page. That's where we post all of our content and videos every day on trade ideas and what the markets are doing, metals are doing. So it's pretty straightforward.
Very good. All right. Well, thank you, Chris. A multitude of gratitude to you, sir, for coming aboard here, and a multitude of gratitude to everyone else for taking the time to watch. And I want to encourage you to please rate, share, hit that little notification bell so that you can be apprised of the newest video that comes aboard. Share, comment, and subscribe.